Before any investment is made, most of us will do our homework, analyzing the stocks we are about to invest into. I have made this observation that many of us are analyzing the market either on a one or two dimension mode. And at the end of all this work, like studying into the company's financial ratio, we are still struggling with uncertainty and lack of confidence whether we should be getting into the market or not. Now, let me just give you one example on what do I mean by one dimension mode way of analyzing. For example, an investor into value investing, we are looking into the company's financial ratio, financial data, the past history, financial statement. Now, this is what I call the depth analysis, but it is only one dimensional. And let me just give you one example of second dimension way of analysis alone. For example, a trader usually they would like to look at a chart like this. Now, in a chart, it consists of two axes, the X and a Y, and we saw that there's this price axis here and the time axis. Now, when we analyze into a chart, you can call it technical analysis. This is a form of what I call the second analysis mode. But if you're just going to study into this price and time alone, it is not good enough. Now, what exactly is the third dimension analysis mode is that when we include the first dimension, which is the depth, and the second dimension, which is the technical analysis, when we combine the both together, it will give us the third dimension, trading and investing analysis. And we're going to discuss about the depth, which is the first dimension analysis, where include the macro, micro, and other data analysis. And also I'm going to give you an example on this case study, how we have identified this transition of the US market from a bull to a bear about 15 months ago using the third dimension analysis. But before that, let's take some time to read into the disclaimer down here. Let's go over to this case study I've done. I posted on my Facebook page on the 18th December 2021. And why is there so much confidence in this analysis that where I believe that there's a transition in the US market from a bull to a bear? Now, using the third dimension analysis where we combine the depth and the technical analysis, or we combine the first and the second dimension to form the third dimension. Now, let me just go to the second dimension, which is the technical analysis first, is that where I look across all the market between the Dow Jones, S&P, Nasdaq, and Russell, and I have observed that there is a divergence where I see that each high, it was higher from its former peak, not just in Dow Jones, but across the different markets. But in the same time, I also saw that the strength of the market has been getting weaker. And that was pretty suspicious. And especially when I saw that the Russell is taking its first dip, meaning that the Russell is taking this lead in forming this bear market, but not yet for the rest of the market in Dow Jones, S&P, and Nasdaq. And this is the time where I turn to the first dimension, which is the depth, which is also including the macro development. Now let's look at what happened then. It was on the 14th December 2021. I believe that most of us still can recall what happened before 14th December 2021. It was the post-lockdown of United States where people get back to work, people get back to the shop to do shopping, and there was inflation. So then the Federal Chairman Jerome Powell assured that the market, the investor, that this inflation is transitory. Now what it meant transitory is that this inflation, because of the post-lockdown, that this inflation is just for short term. It is all right. But on this note, on 14th December 2021, he made a historical statement. Now he said that this inflation is not transitory. And that has sent a signal to the market that the inflation is getting out of control. And if we look back at the technical analysis, which is the second dimension, in fact, it has already warned us that the market, this bull, was getting a little bit divergence back then. And how did I define divergence on my post, on my Facebook post? It was this. Now, I said very specifically that Divergence in a bull market represents that the bull is losing its momentum. This does not mean that it is coming down anytime soon. Now look out for triggers like fundamentals and or technical. Now, so that's what I mean by combining the technical. At a point in time, it is giving me an idea that this bull is not too sustainable, but on the 14th December 2021, on a fundamental shift, this became a trigger that I'm pretty confident that the bull may have transit to a bear market. On that note of what Jerome Powell said, that is called a macro development. Now, how about micro analysis? Now, unless you are getting into individual stocks, individual companies, then I will look into the macro analysis, like studying into the ratio of the company, the financial statement. But then I was trading into the indices as well, so therefore I will ignore that. And how about on this point about other data analysis? It could be getting involved into other studies. For example, you study into its volume, and in this example, I'm studying into its divergence using indicator, using MACD. Or another example in this case study is that I'm comparing into the same type of market, different market between this four, Dow Jones, S&P, NASDAQ, and Russell. But I saw that comparing the four of the same type, I saw that the Russell start to move south first. And that kind of gives me a clue what's happening to the market. You continue to expand on this additional data analysis. It should not come to a point that it causes a confusion in your analysis. So have some, but not too many of it. So now if you're interested to continue to explore into this indices, how to hedge and how to invest, I will include some link below. You can study into it. And where's the market today? And this was what we've discussed on 18 December 2021. Divergence in Dow Jones, divergence in S&P, NASDAQ, and Russell. At one point, NASDAQ was down more than 30%. Today, it is still at down 27%. And the rest of the market are not doing that well also. Let's do one exercise in how to deploy third dimension in our analysis. And I believe in whatever we do, there's always a set of principle. And to draw a cube, the principle is that every side, the length, breadth, and depth, there must have 4 of them. And this is what we're going to do here. And for each one, I'm going to clone it. 1, 2, 3, and 4. And this is what we're going to do to join the dots together. And for this, I have no idea where to place it because I have no reference. And next, I'm going to construct the time, which is I'm going to clone 4 of it. 1, 2, 3, 4. And you will realize that it became easier to join the dots. So, and we need time. We need some work. And I'm getting there, in a short while. And the vertical, which is the price. I clone this. 1, 2, 3, 4. And you realize that as we put in all this effort, we join the dots together with all this principle, that each one, when we duplicate, it became easier and we could piece things together. And finally, the one that I'm not too sure where to place it, I'll place it in here and we'll get a cube like this. Now, instead of looking at 2 dimension, it is just like Humpty Dumpty who sat on the wall because he's living in a 2-dimensional world. He do not know the depth. But once you include the depth and you piece things together, and at the end of it, there's some hard work involved, you'll see the picture in its fullness. And I hope that you're enjoying this demonstration here. I've included some of my past tutorials relating to today's discussion, and its links below. Keep watching it again and again. You too can get into the market with greater precision. I always enjoy studying the correlation between the markets, and I hope today's sharing it will be helpful in how we invest and trade. Really happy that you stayed through this video. You have many great trading weeks ahead.